Market report today. What is going on in the crazy Temecula Valley real estate market? We'll fill you in. Hi, I'm Jessica Genung with the Genung team in Active Realty. I am a realtor here in the Temecula Valley. If we have not met yet, welcome if you're new here and welcome back if you are not. We are going to get straight to the market report. The market continues to swing towards a buyer's market, and we are seeing sellers bending pretty majorly to the increasingly aggressive requests of buyers. We've been getting some pretty low offers accepted for our clients, and oftentimes we are not even receiving a counteroffer. Sellers have also been pretty agreeable to make needed repairs or give repair credits, as well as give rate buy down credits. This includes private home sellers and the new construction home builders. There are a lot of concessions being offered and negotiated. The serious sellers in this market understand the impact that the higher interest rates are having on the buyer's monthly mortgage payments. The interest rates have more than doubled in some cases, and many sellers, they have been willing to give buyers some help with their closing cost credits to help them be able to purchase their home. The homes that are sitting on the market are priced based on the sales from months ago, and these are not reflective of what is happening in this current shifting market. Successful sellers are pricing and positioning their homes to where the market is headed and not where it was a few months ago. Successful sellers are also willing to accommodate buyers' timelines and their repair requests. We are seeing a high cancellation rate currently, and this is partly because some sellers have been digging in their heels and not agreeing to accommodate the buyer's repair requests and other requests, therefore jeopardizing the transactions. Because there are fewer buyers than sellers currently, my recommendation to sellers is to try and accommodate all reasonable buyer requests, because it could be a long while before another qualified buyer comes along. The local real estate market continues to cool and prices have been declining. If you caught one of my last videos titled, "Is the Market Really Crashing?" I gave specific stats about exactly how much the market has declined in our area since the doubling of the interest rates. To briefly recap, Temecula's median price of a single family home peaked in April, and it has since declined 10.4%. Murrieta's peak was back in June and has since declined 7.6%. Menifee's peak was in February and March and has since declined 5.1%. The interesting caveat of today's market is that I still do not think that we are going to crash. There is still quite the housing shortage and enough buyers that would like to purchase a home or need to purchase a home. Some of them have just been recently priced out due to high interest rates. Many want or need to wait for those interest rates to come down. And I have several clients in this position who have a house to sell before they can purchase their new home, but those homes are not selling, and of course that is preventing them from moving forward on their replacement home purchase. Lastly, there are certainly lots of potential buyers that are waiting for the market to calm down a little bit and see if the prices are going to drop even further. This time of year, as we approach the holidays, is when we typically see a slowdown in home sales, which starts to pick back up around February and March as we head into the spring selling season. But this slowdown is more pronounced than a typical seasonal cycle. Last year, we had no slowdown at all, but we also had sub 3% interest rates, if you recall, so there you have it. We did get some positive economic news this week, you likely heard. According to this CNN article, they say the Consumer Price Index rose 7.7% for the year ending in October, a much slower pace of increase than the 8% economists had expected, and the lowest annual inflation reading since January. The stock market skyrocketed on the news, with Dow futures surging by more than 800 points on the hopes that the Fed would dial back its aggressive rate hikes. As of now, the consensus market expectations is the Fed will raise the federal funds rate by only 50 basis points at their next meeting in December. We shall see if the recent run of 75% basis point increases is in the rearview mirror or not. As I mentioned, just because the Fed is raising the federal funds rate does not automatically mean that mortgage rates are going up. Mortgage rates actually came down quite nicely after the positive inflation news, and my lender that has the best rates has the current 30-year fixed mortgage rate at 6.25% with no points. With a little seller credit help, buyers could potentially lock in a rate in the 5% range, which would be a huge improvement from the 7% that we have been seeing recently. By the way, many new construction builders are offering rate incentives in the 4% range even now. They often buy a block of money at a discounted rate, and they're able to offer a much lower than market rate while those funds last. My last comment before we get to the local stats, you may may have heard me talk about Barry Habib in some of my past videos. He is an analyst in the mortgage industry that a lot of loan officers turn to for market analysis and forecasting. As I mentioned in a previous market report, he predicted the core inflation rate was going to peak in October. His prediction is looking to prove true at the moment, but as I always mention, 1 month does not make a trend, so let's see how it plays out over the next couple months. On to the slides, but real quick before we do, I have a couple of goodies for you down below in the description. If you are considering a move to the Murrieta Temecula Valley, I have a free relocation guide that is available for immediate download, and I also have a sign up for a webinar if you are interested in new construction. My webinar is going to be about the top 7 ways to save money on a new construction purchase, and that's going to be free and coming up very soon. Here's the slides, starting with median sales price in Murrieta. So as you can see, the median sales price continues to decline month over month from September to October. So we have the median sales price decreasing another $17,575. And if we go back and if we look at October of 2021, the median sales price in Murrieta was $625,000. So at the current median sales price of $631,000, we are barely above where we were in price about a year ago. Moving on to the median sales price in Temecula, month over month, we continue to decline in sales price 5.1% to the new median sales price is $697,500, which is down $37,500. So this seems dramatic, but if you recall, we had a Temecula bounce back the month before where it bounced way up to like 750. So now it kind of makes sense that it's coming back down. Although this seems dramatic, we just had a weird bounce up, which sometimes happens month over month. Let's take a quick look at year over year in this left-hand column. And this is kind of interesting. Year over year, we have a sales price decline. So last October, the median sales price was $712,500. And so we are down 2.1% at the $697,500. So Murrieta year over year did not have a sales price decline, but Temecula does. Moving on to median sales price in Menifee, and this is a little bit newsworthy in our opinion. We do have a sales price increase, which is our only city that the sales price has increased month over month to $568 to $290. And year over year, we're still maintaining an 8.2% increase in median sales price year over year. So Menifee is holding stronger than Temecula and Murrieta, which is interesting. Continuing in Menifee, we're going to number of closed sales, and across the board, closed sales were down. So Menifee month over month is down 36%. There was only 114 closed sales, which just a month before that in September, there was 178. So 36% decline on closed sales. Big drop year over year. 46.7% decline in closed sales. So our inventory is lessening, closed sales is lessening across the board. Moving on to Murrieta, closed sales down again, like I said, across the board, 15.9% from 126 closed sales in September to 106 this month. And year over year, closed sales are down 41.1%. So huge decline in closed sales in Murrieta as well. Moving on to Temecula closed sales, similar story, but a little bit less dramatic, I would say, month over month anyways, with a 5.9% decline in closed sales month over month. We had 96, so below 100 is very rare in Temecula, I will say, but even September's 102 is very, very low amount of closed sales in Temecula. Year over year, huge decline in closed sales. It's basically half, 47.8% year over year closed sales. Median days on market starting in Menifee is increasing, so from 26 to 30 days, taking on average 30 days to sell a home in Menifee. And as you can see, year over year, it has almost tripled in the amount of time to sell a home from 11 to 30 days. Murrieta, a little bit different story. This month over month, it actually decreased by 3 days to sell a home. So from 25 days to sell a home to 22 days to sell the homes currently in Murrieta. And if we are looking at year over year, it is taking an additional 10 days to sell a market versus October of last year. Median days on market in Temecula, not a whole lot of news here. It is an increase of 1 more day to sell a home in Temecula. So 21 days to currently sell a home. Still pretty quick historically. Year over year, it's gone up 11 days, but that is a 50% increase in the amount of time to sell a home in Temecula. Number of listings starting in Menifee, month over month, we're down across the board. So we're down 2.7% month over month, but we are up quite a bit year over year. So from 311 last year in October to 428, that's a 37.6% increase in the number of listings in Menifee. Number of listings in Murrieta, it is down month over month as well, so 10.8%. I think this is a seasonal decline, personally. Year over year, it is up. Our inventory is up year over year because we had very low inventory last year. We continue to have low inventory, but a lot more than last year, from 290 to 370. Number of listings in Temecula, same story as our other 2 cities. So year over year, we are up 18.9%, and month over month, we are down 8.3%. I think we're continuing our seasonal decline, as mentioned. Don't forget to subscribe to the channel if you want to keep up to date on what is happening in the Temecula Valley real estate market. We make a new video every week, and we'll see you next week. Bye.